The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading day right here. And we start things off in slightly red territory. S&Ps, you see a little bit of volatility about 5:30 this morning. But right now, we're just coming in to test those lows. We're negative by 6 points, or 0.1%, trading at 68.49. NASDAQ 100. Coming down to test that acceleration you had at 5:30 as well. Off 53 points or 0.2%, 25,610. You jump over to the Dow, negative by 53 points or 0.1%, 47,740. And the Russell was the leader yesterday, negative by 5 points or 0.2%. Bitcoin, just above 90,000, off by $290, 90,700. Crude, remaining under pressure. See that acceleration. Negative by 20 pennies at 58.69. A little bit of selling coming into crude right at 9 o'clock. Gold up by $9 right now, trading at 42.27. You have silver. How about silver making a run for those all-time highs yet again? Silver up by 86 pennies, up by 1.5%. We get a Fed decision tomorrow. We've had yields inching higher, even though they're expected to cut. Almost a 90% probability right now the Fed's going to cut. That's what the market's pricing in. But in terms of the 10-year, 4.15. We were just sitting at 4%. So you've had yields inch higher, basically since where we were November 25th. And we're right back at this critical area, right where we were November 5th and right where we were September 26th. 4.15 on the 10-year. As you get a little bit of higher yield, no real dollar strength whatsoever. Dollar just chopping around near 99. We're positive by 4 pennies at 99.12. On the dollar index, you jump over the VIX right now. Slightly elevated in the last couple of days. Something to keep our eye on. A little negative selling yesterday in the market. A little bit of a sell-off. VIX right now sitting at a pretty comfortable 17.09, but positive by 43 pennies on the session. All right. We're going to kick things off with the Fed. So tomorrow, 2 p.m. Eastern Time, we get a decision. 2:30, Chairman Powell, his press conference. We'll air that live right here on TFNN. And I'll be live at 2 o'clock when we get the decision as well. Always a fast hour, fast afternoon, those 2 hours. But yeah, talking about as many as 5 of the 12 voting members and 10 of all the 19 have signaled that they did not see a strong case for a cut. How about that, right? 5 of the 12 voting members and 10 of the 19 total members. Well, 5 of 12 is a losing number. 7 of 12 is a majority. It's not exactly how it works, but that's where the market thinks it's going to be. Of those, only 1 formally dissented, though. Okay? They usually all fall in line. They'll make a dissent, and then they'll go back in line to make their point. And yeah, the battle's on. Battle's on. Whether it's the job market, whether it's inflation, Chairman Powell, a tough task ahead. But the market thinks that they're going to cut right now. And you take a look at this 10-year. All right, we're going to go a little bit big picture here. So we're sitting at 4.15. Okay. And you see right where we are. I mean, we're almost right where we began 2023. Right? Right where we were. 2024. Right? 2 years ago, we were sitting with a 10-year at about 4.15. Now, watch this. Yeah, not the case with the 2-year. Okay, rates have come down on the 2-year. We are at higher price, lower yields compared to where you were at the beginning of 2023. So yes, the Fed is going to cut. But the 10-year is not factoring in all those cuts, okay? The 10-year, we're going to be dealing with debt, inflation potentially. That's not coming down the line for 2-year, right? We're going to get lower rates. The 2-year, you don't have that risk of debt problems, cost of servicing the debt, inflation as a result of that debt. and as a result of mismanaging finances. Now you go to the 30-year. Quite a difference. Yeah. So you look at the 2-year, you've traded higher from 103, we'll call it, to 104. Okay? So you have a slight decrease in yields from where we were 2 years ago. You go to the 10-year, and I'll pull up the yields on these to make it even easier. The 10-year is flat from where we are, and then you pull up the 30-year, and you've got the 30-year going from 124 to 115. Okay? Which means the 30-year is well above the yields that we had 2 years ago. So on that yield curve, now this matters when you're talking about housing. Okay, it's a long way around. I buried the lead a bit, but yeah, Home Depot. All right, they're a little bit worried. And to pull up Home Depot, cautious preliminary forecast for next year. Okay, and that's housing, man. Housing market weighing on Home Depot is interest rates. Yeah, make it difficult to buy a house. Comp sales. Company expects comp sales growth to be in the range of flat to up 2% next year, below the average estimates. Comp sales, yeah, are a key gauge. Of course they are. So Home Depot is hosting an investor day with analysts today. Also provided a market recovery case that spells out higher growth when the company sees housing activity and spending picking up. In such a scenario, comp sales would be 4 to 5%. We believe that the pressures in housing will correct and provide the home improvement market with support for growth faster than the general economy. Well, they better believe it. That's the business they're in. Home Depot expects to continue to grow faster than their market, as in gaining market share. And yeah, in their latest report, they had said expected rebound in demand had not materialized. So there's Home Depot action on that news. You're going to be down about $10 from $349 to $341. We take a little bit of a bigger picture look on this thing. Boy, you're a straight rocket ship up from 2011. That's where that line comes from. Way ahead of itself in 2021, got ahead of itself again in 2024, but we're at a nice baseline right now. Now you break below this level, though. 275 is not that far of a cry if we really have problems with housing, but I'm hopeful that that's not the case. People need the ability to buy a house. You can't force market rates, though, okay? You can't just decide what you're going to pay market rates on a 10-year, and that's the problem with the Fed cutting rates and the 10-year not even participating. We'll pull up the yields like I mentioned later in the program. But that's Home Depot. You take a look at Lowe's. They're going to be down a couple dollars on that news as well. Lowe's trading at $242. Jump over to Walmart shares. Quite a little sell-off yesterday. Walmart slightly in the green. All right, folks, we'll come back. We'll take a look at some of the housing stocks. Yeah, Lennar going to be lower yet again. That's not what they want to hear. Look at these stocks getting ahead of themselves in September. Lennar, we're pushing 118. We'll come back. We'll take a look at the home builders. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. NVIDIA shares. So we haven't even talked about NVIDIA. We're going to the home builders in a moment. But yeah, NVIDIA, they're going to be able to sell their chips to China as long as they pay the taxes that the president deems that they got to pay. 25% going up top. 25% going up top. Cost of doing business. Got to make it happen. President says the number, that's what happens. That's the taxes. That's what happens. That's the tax rate. The tax rate's in, and it's a great thing. It's the world we live in, man. A remarkable testament that all this stuff comes out and we just pick a tax, right? The president just picks a tax, and they're lucky it's a tax because sometimes he just picks an ownership stake of companies. Last night, he chose just a tax. We'll see if he stays with the tax or if he goes to an ownership structure. It sounds satirical. It's the exact reality that we're living in. I know it sounds like satire because it's so common now. That's the tax. He's decided at 25%. You get an acceleration. You get a bit of a give back. We'll see if China's going to want those chips. But yeah, the China industry players, they're going to want those chips, folks. They are. We'll talk about that coming up. We go back to the home builders. So D.R. Horton, let's jump around here. And yeah, I appreciate that, Elo, talking about Ferguson. They have earnings this morning as well, and not good. And that's a big supplier, whether you're talking about plumbing, HVAC. We'll talk about them in a moment. So D.R. Horton, so you accelerate higher earlier in the year on the premise that we were going to get 16 rate cuts over the period of 2 months. I kid, exaggeration, but the market definitely got ahead of itself. That's where you saw these things ratchet up. You start selling September 15th. We get radical selling October 6th. With volume, I mean, radical 24 million shares almost, 23.2, 23.3 on October 6th, the week of. Not really the volume you want to see on the buy. Now, we're going to open at 150 right now. Let's put this thing on a daily. Yeah, I mean, realistically, you have this bar out there from November 21st. We're almost going to be at the high of that bar on the open. The high of that bar is 148.14. You got a bid right now, 149.51. I mean, 140 would be a nice buy in DR Horton. That brings you back to where you were in July. You gap above that area, accelerate, come back, test it, break out too early again, and come back and test it one more time. You jump over to Lennar. There was some nice buy in the week of November 17th. Okay, there's your floor. You get a low there, 112.11. I think we got a little bit more pain in these equities, especially you got Home Depot, you got Ferguson today. So Ferguson, this thing's been on a tear, but you're going to open down $7. We're going to open at about 238. Take a look at Ferguson. Yeah, you accelerate higher on earnings. Yeah, not a bad. You got, look at that acceleration on holiday trading week, right? That's where that bar is. That's Thanksgiving week. So you trade lower. You get a pop on light volume, and we're going to do some volume today on this equity. Going to open about 238, 239. Yeah, it's basically the opening bar of the September 8th acceleration. Take a look at yields right now. And the dicey part about this is it looks like you could be rolling over, but you look at the volume. This is quite a light pullback on a weekly basis. All right, you accelerate higher the week of November 17th with volume. You get a holiday week for Thanksgiving. You pull back on only 7.8 million. This is on the 10-year we're looking at last week. We're going to do some volume this week. Can't argue that on a technical basis, though, this thing cannot break through. Now, even as yields have crept higher, okay, the dollar's weak. Dollar looks like it's rolling over, bouncing from 100 yet again. We're getting a slight bounce today, but that's going to be a determining factor for sure. And yeah, you talk about the Ferguson numbers, okay? So this out this morning, misses profit estimates and refine the full year outlook. Profits, they take in earnings per share $2.84 for the quarter. They were looking for $2.97 was the analyst expectation. Revenue rising 5.1%. The market was looking for 8.09. They come in at 8.2, so they beat there. How about an operating margin of almost 10%? An 80 basis point improvement on an adjusted basis. Ferguson now expects net sales to grow about 5% compared with its prior outlook for mid-single-digit growth. Adjusted operating margin 9.4 to 9.6, and they're going to spend $350 million for CapEx. And in terms of what they do, is this one I have it? Yeah. They got everything. Okay, plumbing, HVAC, commercial, facility supply, fire and fabrication, industrial, builder, waterworks, all of it, but plumbing, HVAC, huge player. And you talk about, let's see, what are we talking about? How big are we at? Yeah, nice $48 billion company. How's that? $48 billion company. They're going to be down almost 3% on the open. This thing's been on a heck of a run since the April lows. But boy, you are not that far off from the 2024 highs. Let's back this thing up on a 5-year. Boy, it'd be a beautiful test. Like this 224 area, you come back, you test this on lighter volume. I mean, watch this. This would be something else. Oh, we're almost there. Jeez. You almost did it. The 1-to-1. The 1-to-1 was 268. You made it all the way to 257. Now the pullback. Oof, touches the 618 perfectly. come back, test this 220 area one more time, and see how we trade into that area with above volume. We're not going to get a new Fed chair that's going to be calm, folks, and allow the market to dictate the terms. And so on a 6 to a 9 to a 12-month basis, I'm watching these housing stocks, okay? And yeah, I'm biased. I'm in the real estate business. I'm a builder. But we got ahead of itself. This market, you look at Lennar. We're trading at 118 now. We were just trading at 144. Okay. You look at DR Horton. We're trading at 149. We were just trading at 183. KB, pullback not as substantial. We're trading at about $61. You only got to about 68. And we got the 10-year at 4.15%. Fed day tomorrow, markets in the red. We're coming back for the opening bell, folks.
Skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Netflix shares, we're basically flat on the open. We'll see how this saga plays out, and it's going to take some time. Warner Brothers trading right now basically on almost the full price that Netflix is going to give them, $27.44. I believe that price is $27.75. The difference, okay, right? The difference, though, between that and what Paramount is pushing at $30 has to do with the cable networks. Devil's in the details, and it usually is. That's what they say. So Paramount has made a $30 a share all-cash bid And the difference lies in the valuation of the struggling TV networks, which Paramount's bid includes and Netflix's does not, though. So Paramount is going to get those networks. Netflix's does not. The value of those channels, somewhere between $1 to $4. They say $2 to $4. Okay, but 1 is thrown around here at some point as well. Paramount has suggested a value of $1 a share to the Warner stockholders for those assets, while analysts say they may be worth closer to $4 for those assets. There's the discrepancy from the $27.75 to the $30. Now, in the filing Paramount gave, this is the part, the bidding could go higher. In a text message contained in the regulatory filings, one of Paramount's bankers told his Warner Brothers counterpart that the company's $30 a share offer is not their best and final. They are bringing it, man. And then you get into the fact that who is a part of this deal? The president's son-in-law. Of course, the president's family is in the mix, okay? Kushner, Ellison, and Apollo, but Kushner right there. So that all plays into everything going on, man. And so that is a tough one for Netflix. They still think they can get it done. And Netflix may come back and match any offer that they have, right? That's going to be the play there. So Netflix is willing to go to war as well. The war chests are open. Not sure the market likes that, as in there's your volatility on the news that they're buying them. Here's the volatility on the news that if you want them, it's going to cost you at least $108 billion plus. Pretty remarkable. Now that's the cable networks. That's Kushner. Now there's another story I had up here. Let's see. Oh, that's NVIDIA. Here it was from the Journal. Can't help. I mean, they all have some great articles. It's tantalizing. I mean, it's practically the richest man in the world. He was the richest man in the world earlier this year before Oracle's tanked, pulled back from that remarkable acceleration. I think he made $89 billion in one day, or Oracle went up $89 billion in one day. Ellison did. Now, this started unraveling Thursday night, okay? Sensing trouble, David Ellison, CEO of Paramount Skydance, the son, is texting Zaslav, okay? Just tried calling you about new bid we have submitted. I heard you on all your concerns. I believe we've addressed them in our new proposal. Please give me a call back when you can to discuss in detail. Sensing trouble, he followed up, saying Paramount had offered a package that covered all the issues Warner had raised, including the need for a strong cash value and a speed to close. It would be the honor of a lifetime to be your partner and to be the owner of these iconic assets, he texted, according to the filings. Now, it's amazing that as he's going through this, right, he has to know that he's going to include these text messages in the regulatory file. They already know they're going to sue. This is Thursday this was happening. Thursday. Okay, the lawsuit got filed on Monday. He's probably sitting in a room with a team of lawyers constructing these texts as they're writing the regulatory filing, knowing that there's going to be a potential for Netflix to win out on the bidding war. On Friday, those concerns were realized, the deal was announced, and his father called Trump to tell him this was not a good deal. This is the reality, okay? Now, not surprising that the richest man in the world earlier this year has the president's ear. He's showing up there, whether it's Oracle, right? All the deals going on. And realistically, folks, both of these deals would hurt competition, okay? But yeah, Netflix probably more so than the other. They're already the big dog. And you better believe that they're going to do it to make sure that Ellison doesn't build a real competitor here. And that's what he's trying to do. Realistically, we need more than two companies that are competing in streaming, but they're going to make the case, and they have a real argument. Okay, it's a close call. They're going to make the case that there's enough competition with the two of them. Netflix makes the case that there's enough competition if they get them, which is very difficult to just pass the smell test. Yeah, I mean, look where they started, right? Look where they started. Paramount's board met in September, okay? A few days later, Ellison visited Zaslav. Now remember, Zaslav just got options at $10 a share. Talked about this yesterday, okay? That's the biggest joke of all in terms of him reworking his contract earlier this year and getting new options that have a $10 basis versus the previous ones that had about a $30 to $35 basis. The reason why is because the company had tanked so far under his tenure that his previous options were almost on the table. He's basically saying, hey man, why am I going to work here when you guys are only going to pay me if I get the company back to what it was at when I started? Because that's not even realistic. You got to pay me if I just get the company up from where we are right now. Don't base the value on where I started. Come on, that's not fair. These are the conversations as this guy walks away with $1 billion. Okay? If you're worried about competing for, asking for raises, that's the whole conversation. Imagine he's the CEO and he says, you got to give me more options. I'm never going to get this company back to the value that it was at when I started here. How am I supposed to be excited about options that are only based on the value from where I started as CEO? Let's peg the value where we are right now and then just pay me a lot of money if I build it higher from where we are right now. And he's going to walk with $1 billion. Originally, the proposal was $19 a share. Okay? He followed that offer up with a formal letter, 60% cash. Imagine where we are right now, right? So that originally was $19 a share with 60% cash. We're now at $30 all cash. And that's not my best and final. Oh. Risk reward right now, you're at $27.57. And even if Netflix gets them, feels like they're going to have to pay more than $27.75. The problem is that if there's any stock included, though, right? Check this out. If Netflix deal gets done and they do a cash and stock deal, well, Netflix was just trading at 110. It's trading at 96. That stock is down 12% from where it was a week ago. That matters in the value of the deal versus an all-cash deal. They're going to make an HBO series out of this one. It'd be a good movie, right? What do you got? You got Ellison. You got Ellison's son. You got the Netflix CEO meeting Trump for dinner at the White House for a couple hours. The lawyers are probably going to make $1 billion on this one alone when you look at all the context. All right, we jump around. Amazon shares, slightly in the red. We jump over to NVIDIA shares. Actually in the red today. They're selling chips to China. The president wants a 25% tax, so he gets it. And we'll see if they can actually move those numbers to China. S&P in the green, up by 1. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So yeah, Stellantis, they're bringing the tiny cars to America. Boy, look at this one. So, Stellantis to bring the tiny Fiat car following Trump's remarks. He talked about it. So, this thing only goes 28 miles an hour. And I'd encourage you to look at the safety of this thing if you have the option at all, because, you know, I look at these vehicles and then they're fantastic, right? And many times, you know, nowadays I associate it with almost like a golf cart, right? Golf cart, the fraternity of golf karting and everything. But yeah, you're talking about only 28 miles. And in America, one thing that does happen is the size of the other cars on the road are a huge issue. When you look at, I was pulling up, so check out, I mean, even pedestrians, right? I don't think you're dealing with the same amount of cars that you're dealing with in terms of, this is the issue within America. This one's from 2023. There's many articles about it, okay? And taller cars and trucks are more dangerous for pedestrians. Well, guess what? They're more dangerous for tiny vehicles that only go 28 miles an hour as well. Vehicles with higher front ends and blunt profiles, 45% more likely to cause, and that's just talking about pedestrians, okay? But guess what it points to? And I don't think I have to tell you, okay? Especially if you're living in Florida, man. The trend in America is bigger SUVs, okay? Trucks, SUVs, all that stuff. So that's where it gets a little dicey, okay? And these cars, you know, they're great, but they're basically the safety of you know, nowadays. You're only going 28 miles an hour, so you're not on the highway. But boy, with the cost of a new vehicle pushing $50,000, $60,000, $70,000, understandable. Top speed at 28 miles an hour, driving range of less than 50 miles. It's produced in Morocco. All right. Can't blame them. And if you're living in, you know, small city living, stuff like that, you know, St. Pete, there's many areas around, I'm sure, around the whole country, but around here in Florida, golf carts, people love them. They're flying around, whether it's St. Pete, Dunedin's got some great golf karting. What is it, the Villages? The Villages survive off golf carts, right? Tell me. No? Maybe. Yeah. All right, we jump over to the car makers. Tesla shares under pressure a little bit yesterday. Tesla, you're bouncing a bit. Tesla up by 0.4% right now. Ford, it's been chopping around since that earnings acceleration. Quite an uptrend from April lows. Did a longer term chart of Ford. Whew. Yeah, $14. Let's back it up even more than that. Boy, how's that for a tough looking chart? Are you a big fan of the Ford in the 80s? Well, you can get it at the same price right now. All these charts. GM. Oof. Yeah. Man, Basil Chapman's been all over this one, folks. Look at this. Right up to the 1-to-1. Up another 1.4% today. There you go, Pat. Yeah. Why not? I'd be riding around a golf cart forever, man. I don't know, why not? All right, if you can do it, why not? Florida living. All right, let's see how we got the tech stocks open. NVIDIA, unchanged after they're going to be able to sell those chips to China. We'll see how that plays out and whether China embraces that. China wants their own their own ecosystem. Oracle up by 0.5% right now. AMD down 0.5%. Broadcom's flat. Dell off by 1.6% right now. We'll jump over to Google. All right, let's take a look at the heat map. S&P 500, where are we higher? We got financials in the green. Some of the industrials, energy, Exxon up by 3%. Check that out. Johnson & Johnson up by 1.8. CVS, let's take a look at CVS, up by 4.6% right now. So they raised their adjusted earnings per share and sales guidance. There you go. Let's take a look at this thing. All right, right back up to the January 2024 highs. So we just hit a high earlier on their last earnings. You hit that high and you give it up. You do it with volume. It's going to take some real momentum to get above 85 here. But you're going to have some volume on a day like today. You already did 2 million shares. We're 17 minutes into the day. Yeah, you can break above this high and hold it. 83.25. We got above there. Yeah, you closed the October 20th just above that area on lighter volume, though. You got to get above 83.25 with some volume. You're talking about volume of, on a weekly, 85.6 million shares. You might do it this week when you get some big earnings. CVS up by 5%. Walmart up by 0.3%. Target. Yeah, Target's just under pressure. Nothing real convincing for a buy yet. Maybe you jump up to this trend line that we've been hitting. But we need some real buying, and there's no buying. You have holiday week. I mean, like last week on the rise on Target, less volume average per day than you were doing on Thanksgiving week. Very light volume bounce on Target shares. TJX, the rocket ship. A little bit overbought at this price level, but yeah, strong equity. Negative by 27 cents today. Coal shares. Some big numbers on earnings. Giving it back. Let's take a look at daily. It's a strong looking chart. You're pulling back on lighter volume. No volume on this pullback whatsoever. You get strength up to 24. You're trading at 22.84 in coals. I don't know what they're going to be selling in those stores, but the charts are saying they're going to be selling something, man. That is trading higher with volume. Quality volume to the upside, and we're backing off with lighter volume. Look at the S&Ps pushing the 1-to-1. Check back in on the dollar. All right, dollar's got a little bit of a bid going on right now. 99.14. Gold is strong, man. Dollar's higher. Gold up by $18. Poof. We might break an all-time high on silver by the time we get off the air. Here we go. All right, let's get the silver bulls going. Where's our man Mike in the den? Let's go. Let's get the memes going. We need the silver bullion, guys. Silver trading up $1.31 at $59.71. within 20 pennies of all-time highs. We'll come right back, folks. We'll take a look at some silver equities. Right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we got a chart of the 2-year yields. Okay, I went through the price action of this earlier, but just to show you, and I know we're all somewhat aware, but boy, nothing like a visual representation. So this is the 2-year, okay? Most heavily determined, of course, by where you think the Fed is going. And right now, zooming in on the action, okay, this is the last couple of years. And like I was talking about, the 2-year at the beginning of 2024 was as high as 4.4%. Okay, we're at 3.56. Rate cuts are priced into this market. Now, we've been wrong before. Okay, a year ago, the market was right where we are right now, and you got all the way up to 4.33, 4.39. The fact we have a new Fed chair coming in May on a short-term basis, it would be tough, in my opinion, okay, for the 2-year to do anything like what we had last year. It doesn't mean it can't happen. Okay, inflation could become persistent. The companies that have been eating the costs, listen, those inflation costs, a certain percentage of those costs are getting eaten by the exporter. A certain percentage are getting eaten by the importer. And a certain percentage are getting eaten by the consumer right now. Everything says that eventually the exporter and the importer are going to force those margins back to where they were and force those costs on the consumer. So there is a risk that happens, okay? But in the short term, very difficult to imagine you get that hike. Now, that's your 2-year, okay? We're pushing lower yields. It's coming at you. Then you go to the 10-year, not the same, like I was talking about, okay? You go back to where we were at the beginning of last year, we're right where we were. The 2 years dropped dramatically over that period of time. We started last year at almost 4.2. We're at 3.5. The 10-year started last year right where we are. And then you look at the 30-year, okay? Beginning of last year, we were at 4. We're at 4.8. So the 30-year is pushing the highest levels we've seen. The 10-year is chopping around in the middle of the area that we've been in for the last 3 years. And the 2-year is pushing lows. Why is that? Because the 2-year is down because the Fed is going to cut, okay? That's where we're going to be. We're wrapping up just that quick, folks. Stay tuned. Basil's up next. Have a great day. Have a safe day. Thanks so much for tuning in. Basil Chapman next, folks. Have a great day.